Good morning, everyone. Let's start with our daily market commentary. Now, today we'll try to make some sense as to what's going on in the market. So let's take the monthly chart straight away in order to understand if broader picture looks very dimmer or we have good things yet on the way. So when we see SPX on the monthly side, so if I just try to zoom out, what we have seen, there has been a spectacular rally, right? Basically from 2008 crash has been a good decent rally on the upswing. Now, whenever a good rally had taken place and this started going way fast, it consolidated, again went down, and then it took multiple supports around these zones. So this was a good strengthening rally. It went sideways and then you had the fall. But then again, after these falls, couple of times it went down, it made a spike, and then again it zoomed up. So more or less, it basically went way above the consolidation zone. And after this, 2016 or so, started remaining higher, and then we saw one more rally on the upside. Now there is a difference in the stride or the rally which has happened prior. So if you see this rally which happened over here at least had broader candles and it was going up slowly and steadily, not like a fast zone. So more or less around 45 degree kind of 50-degree kind of up move. But what I see over here, this has been little bit fast and the last part has been zoomingly fast at the top. And all these candles have smaller bodies and then the body started going up. So more or less, this was not with strength. Plus, if you see, the upside came very fast. So more or less in the kind of 60-degree zone where the rally took place, and then last uptick was also very fast. Fine, even if the fast rally happened, everything was okay, because when it comes down, so this was exactly during the budget time or basically the Feb time when on the top was made and more or less on the top it came back down. Now the good part of this upside, which happened very fast, so the last upside was fast, came back all the way down in order to test whether it can go below these levels or not. So after that, again the uptick came, again downtick came, but more or less it never violated the lower base over here, kind of making the first stop, coming down over here, again went and tried to test the prior resistance. So when it is testing the prior resistance, it basically seems something like this, where the fall came in and then the test was trying to make on the upper side. Again it comes in, again it tries to make a test on the upper side, and then it starts going higher. So in order to get a bigger upside kind of rally, it is very clear it has to first consolidate at the higher levels and then basically take support on the resistance, which is prior resistance acts like support, and then you will have good uptick. So at least over here, when the downtick came by, one thing was clear, a good base was formed around the zone. So if you see kind of coming down, trying to make a U-turn and trying to go higher. Now when we say over here, it never stopped over here and did not spend some time. Like here, if you see, it comes down, comes back up, spends some time over here, then goes up, then again tries to test, and then it zooms up. So this took normally about 8 months before an uptick started, and here if you see, there has been only 1 month when it just zooms up. So this basically gives us not a very strong feeling that it can go up or not, but more or less, if you see, the rally started almost towards 2600, right? So this was kind of base 2600 where the rally started, and more or less from this level it started going up. Every month was a green candle, right? So every month it was striding higher, and then it zooms and makes fresh highs. And what we see in the last month or so, or this October month, the selling comes right from the top and continuously towards the base. Now the most important point to understand, as I said, the rally took fast, right, on the upswing, and then it is trying to retrace. Now if you see from the bottom 2600 towards 2900 or so, more or less these are 300 on the upside, 150 points down, comes back to this zone. So more or less 2750 or 2700 becomes a good support zone, right? Same analysis or analogy we need to place for Nifty as well. But now what I see, why I'm trying to focus on SPX, because the bigger structure is intact or not, or the economy, the developed world is trying to go up or no, because there has been Fed raising interest rates, number one. Number two, there was Trump war which is happening, and now the earnings which will also kick in. Now more important over here, this rally which took place was basically by only concentrated stocks, so like 4 or 5 stocks, and they were trying to take it much higher, right? So that is where one has to understand that this rally will sustain or not, and it comes down. Now, the only test or the litmus test one has to understand over here, this should act like a base. So 2700 is supposed to be a very good base, and if it tries to consolidate at the higher levels, again goes up, right, kind of base violation happening on the monthly candles, that will trigger one more rally on the upside. So I'm not losing out hope, because there is one more upside which is still in the way, okay, only provided that 2700 doesn't is not taken out. Number one. Number two, even if it takes out, so let's say the month sells over here, it settles, the next month one more selling comes by, which is quite likely, but more or less you can see lot of spikes have happened on the downside. So basically the buying has taken place around this zone. So more or less this 2600 or 2630 kind of zone, this all these spike zones which are there, more or less I can say about 2600, I am still way bullish, right? So nothing will go wrong if there is one more kind of downside which comes in, and more or less from here it should take support and cling on the higher side. If it takes support on 2700 for a couple of months, then goes high, it will take some time to restore the upside, because it has to breach now 1, 2, 3 months high. So it might take time. Now more important is to understand sustaining above 2700, number one on the monthly side, and second, remaining above the zone or never coming towards 2600 or so, right? So the best case about 2700, and we can see one more rally on the upside. It might come down, it might make a spike, come back up, and then try to sustain around these zones for a upper target. Now that's SPX still holding strong, and we can see a good selling has come in for the last month. So that's where it's trying to bring downside on Nifty as well. So one focus from global side has been on the downside pressure from SPX because of Fed rates or maybe other macros which are there. The most important is now to go out and look for dollar and for oil, because these two have been basically external macros for Indian markets. Now what we see on oil as well on the monthly chart, it comes down, tries to make a bottom. So first bottom, second bottom, third bottom. So normally the higher lows were made, and then it starts striding higher. The most important point to understand for oil, here was the point where it took multiple resistance even prior. So the level was around 70, which we had discussed prior in our commentary. And once on the monthly side, it breached that, it was set for a higher tone towards at least these higher levels of candles, which was around this 85 kind of mark. But the most important point to understand, after it took out, it came back and it tested over here. So that basically shows he did not just zoom up, he comes back down and then he takes support, giving him one more thrust of upside. So the point or target which we wanted is reached, but the most important point or takeaway for oil, the oil we want it to go down, obviously cannot go to 40 or 50 or some kind of structures downside, but the most important point, the high was made, and for this entire month if you see, selling has come through, number one. Number two, that we need to understand, it should basically go below 70 for a downside. So there is no downside in oil after 70, right? Because multiple supports have taken place. Prior resistance was also around the 70. So it might come down, the selling pressure has happened, but more or less after selling, one more candle comes down, then it will get again a good amount of support. So oil from the highs from 85 has come to 75. People have yet not noticed it, and that's one feature which is acting in our favor, right? So this might kick in later, but at least oil is not now boiling high, but it is now sliding downwards. But more or less, agenda is it won't go below 70. So more or less, this can become range for next 6-8 months till the upper levels are not taken out, right? So at least on the oil side, we can say it is in the consolidation phase after making this high. Going down to dollar index, because USD INR has suffered a lot. This entire mayhem has happened because of that. The point to understand for dollar index, it's been sliding down, went sideways, slide down. The last pull of the downside, if you see, then it slided or made a good amount of support around these zones. Then the slide, whatever slide happened at the last juncture, it basically pulled up and took away all the downside in one go. The most important point to understand, this was the base range, and then it started dwindling above the base and then tried to also go and test the higher side. The most point, which is very important, after the big up move, it has now been going sideways and with loss of momentum. There are no candles which are basically way big green candles, as you can see over here, and taking a good support on the downside at 90 levels. The most important point is this has now taken out the strength for the upside. But what we can see, first selling came through right from the top, and then the second selling came through, but then again the buying took place, right? This was acting like prior resistance, acted like support, and then buying took place. And what we are seeing for this month, it is trading higher. It is very clear it has a smooth ride almost towards again 97 or so. So the most important point for dollar index, I need to basically understand if it can go past 96, 97 or not, because till year 96, 97, Indian markets have already seen the worst. So even if it comes back and oil clinging down towards 70, it will give us a good mix of plus and minus. So it won't be much of a fiasco. So more or less from global output, I do not think, I am cautious, but I am not very pessimistic, as everyone has started building a correction or a crash kind of scenarios into the markets. But the agenda is, when we see dollar and oil, I am pretty much, they are seeming to be balanced and not boiling on the higher side. So that's one good takeaway which we get from this monthly chart. Now let's go down to Nifty. So before we go on to the current mayhem which has happened, let us try to go back and understand certain things. When we go back and we try to understand, what I have a feeling, or what I basically understand, is the last correction which happened over here in 2008 or so. And before any big correction, big crash happens, one has to understand during this phase, okay, or like 50% downside happened over here, and we call it as crash. For a 50% downside, please go and see on the monthly chart, there have to be big green candles going upwards at least for 4-6 months. If you see over here, the stride was higher, came down, again it started going higher, came down, and if you see here, it came back and always tested the prior highs, right? The last uptick which came, it also came back and tested the prior high. And what we see at the last point, the zoom was very, very fast. So we would wait for this kind of zoom to happen, then only a bigger downside is quite possible. Now the most important is to understand, are we seeing this kind of zoom currently in the market? If yes, then yes, we are poised for 50% downside. If not, then you are basically in this phase, correct? A phase prior to that bubble territory phase. And in this phase, the correction, if you see from here, it will come down to this zone, which is not more than 30%. So if I see from 4,600 towards almost 3,000 or so, so that's 1,500 points. And that basically means roughly around 10-15% or 20-30% is like the max on the downside, right? So depending on which phase you are in, right? If you're in this phase, second phase or third phase. If you are in third phase, then yes, a good correction will come through, at least for 50% kind of crash. So let's understand whether that's happening or not. Then what we saw, now whenever these big crashes happen, just try to see for 1, 2, 3, 4, 5, 6 months, it went almost sideways. Okay. After that, it zoomed up in next 3 months, came back to the same point from where the fall happened, number one. Number two, after that, it started sliding higher, started consolidating at these higher levels from where the selling came through. And then what we saw, it basically picked up and reached to the prior high once again. The most important point to understand, did it zoom up? No, not this time. If you see the upside which has happened, it took a lot of months to reach to the top from point A to point B, but here it just took 3 months to reach to the top. This is the difference which we need to spot. If it takes more time to reach to the top, slowly and steadily it is trying to go up. It's like hare and tortoise story, and this is where the strength is more present with it. Now what happened even after this? Comes back down. Now see the downside which we have seen. So from the top, if you are seeing from 6,000 coming towards 5,000 or 4,500, again kind of 15% downside or 20% downside you can see at the max. Now why are we seeing only 20% downside is because it has not entered in the bull phase territory or bubble phase territory. So this is where one has to understand. So downside came back up, again the correction came. This time the correction which happened was way less compared to the previous time, right? And what happens whenever you see a big crash, you tend to feel, no, now this time also there will be a big crash, right? And people tend to be more sentimental and emotional rather than buying good quality stocks. So this is where one has to understand, keep your calm, try to understand where the phase of the market is, and then you try to pick your spots. After the downside, when we see from 2011, if you try to see now going out, it started going higher and tried to cling high, and then finally it got some breakthrough because of 13 and 2014, where the new election government comes in and some stuff like that. But even after that, if you see, it consolidated almost at the higher levels, right? So what's happening over here? Then after the fall, it consolidated at the higher levels, and then it started zooming higher. Now when we see this rise which happened in the previous time, again we see there was no big up move which has happened like a bubble territory, but at least a good upside took place. After this, the correction started from 15 to downside. Now there are many questions why the correction started on the downside. The correction basically started on the downside because the earnings were not coming through. Now obviously when markets went beyond the earnings, then the valuation went expensive, and then it basically corrected. Now again the question comes, when the correction comes from 8,000, 9,000 range and comes towards 7,000 or so, why not it corrected towards 6,300? Why it did not come back towards 5,000 or so? It will never come back because it was not in that bubble territory. So whenever these corrections are happening, please understand prior to this, what is the phase of the market? And if you see over here, this phase of the market was way different than this phase of the market, right? So it does correct, but whenever it comes down, it is not 15-20% is the max downside. After this, again the upside came in, and it was very fast. If you see, every month it was clinging high, came almost to the same high once again. After that, what do we see? It comes back down, and this time again the correction is shortened. So what are we seeing over here? Every time the correction gets shortened, and if the correction gets shortened, you are poised for upside breakout. Again the breakout takes place, and then we head higher. The most important thing to understand, the rise was very fast, like S&P 500, trying to, if you see, this is the last pull which happened, came back down, right? But the most important point, it took support over here, and then again it started going higher. If I see the last move which happened, basically from 10,000 to 11,000 or 12,000, move was very, very fast. Okay, fine. Even if the move was fast, the selling came through. Now from 12,000 or so, the selling is coming through almost towards 10,200 kind of levels. This is the prior level from where the rally started. So there is no point where we try to say, no, now markets are headed way lower, it will become 7,500 or 6,000 or something like that. Please try to understand. The rally which happened were from 2 points. So if I try to basically just join 2 points, one is this particular level. This was the rise from where the entire thing started, came up, came down, and came up, came down, and reached over here. The second rally, if you try to see, is again on this side, but this time the rally took place somewhere from here. So there are two rallies that you can consider for an upside, which we can see. Now let's understand these two rallies. What we see over here is 7,000 and went up to almost 12,000, right? So which is 5,000 points upside, correct? And if you see 5,000 points upside, even in the worst case, 50% downside or Fibonacci retracement of 50% if you try to put in, it basically comes around 2,500 points. So 2,500, 2,000 is already out. 500 points basically gives me 9,500 kind of zone, number one. If you see the second point of rally which took place almost 8,300 towards 12,000 or so, right? So again, more or less 4,000 points and 2,000 points will retrace back. Again, you are coming towards 10,000 zone. So what's happening over here? What we see over here is even in the wildest form, the markets where it is currently placed, if S&P does not fall below 2,700 and what we decided, if it remains in that range, oil has already cooled off. If dollar does not shoot, then you have way more chances of going sideways and the upside. I'm not saying the downside is not there. Downside is there. But if you try to see, this is acting like a good support through and through. And the two rallies which has happened from the lowest which I have connected, we basically see downside towards 9,500. So let's now understand these 2 points for our downside. Okay, so let's remove these lines and just understand when we are trying to see the downside, where markets can basically look for downside. The most or the worst downside that can come below 10,000 is only when the election sets in and Madhya Pradesh is also lost by BJP or S&P also goes down towards 2600, then you can see one more round of downside which is clearly present. So almost towards 9500 to 9700 zone, one more downside can take place. Number one. Number two, try to understand if in November prior to election downside takes place, okay, and it's a state election, it's not the final election, please understand. It might make a gunshot strategy over here, going down, recover everything from December and then shoot higher, right? So don't try from these 2 4 months fall, people have become totally bearish, please understand. So before the election also people would tend to be bearish rather than bullish. Agreed, election results might not be in their favor. You can see one more slide on the downside, and that might basically bring in a big buying after December or so. That's what I'm saying. Try to be away from the market till December. Try to let the sanity comes in. Let the extremity also be tested. I would be happy if 9,500 comes in and it gets tested, because once it gets tested and the reversal happens from here, the bounce will be very, very fast. It will not stop. Right, and then what happens, let's say if prior to election result or poll in December, it basically goes down, and then by any chance if they win out, right, Chhattisgarh or Madhya Pradesh, even two, not even Rajasthan, because people are saying that they will not win Rajasthan, but the point here is even if they win out, then the chances of BJP coming in May 2019 is bright, and then you can see a cling on the upside. Now, how much upside is possible? Please understand. So the two important level for us is the current juncture around 10,000 zone, and the second one is around 9,500. And these two levels which we have found is not by taking prior supports, but also by seeing the rally which has happened previously, and the downslide basically brings us to these levels. Now let's say May 2019 election comes by, markets are striding over here, maybe around 9,500, Modi ji doesn't win. You can have the worst downside towards 9,000 or so. Please understand, 9,000 is a good support on the market because this is the prior resistance. So this will act like a huge support, but yes, a sentimental effect can bring him down towards 8,000 or so. So the biggest downside that you can see in the market is towards 8,000. Like that's the worst case, and we are very much, I'm sure, that will be bought because the value buying will emerge and it will be bought and it will be brought back about 9,000. So on the worst case scenario, please understand, from 12,000 the journey is not left more, right? From 10,000 the journey is only till 9,000. Agreed, the pessimism will be way more compared to what it is at 10,000, right? But all this political fiasco will come and go, please understand. But if the earnings pick up, if the slide on downside can bring in a huge rally on the upside once again. Obviously, you have to keep in mind S&P 500, because if after this fall Modi ji doesn't come, S&P 500 also starts going down, there is very clear agenda that 8,000 levels will be tested very smoothly. Correct. So this is the good takeaway that one has to understand. The rise for last rise was very fast, which agreed, and it was taken out. But now it is trying to go in that consolidation phase, where even the S&P is trying to go in the consolidation phase. The last rise was very fast. It came down. Now let's see what's happening after 2,700. Once this is taken out, 2,700, still I'm not losing hope because I see again support coming in this zone. So this will be a second test, and then it should start going higher. If it sustains 2,700, starts going higher, then there is no point in looking back, because all I need to see base violation, a red candle, two candle above the base, whether it is approaching on the high side or not. Second, we try to see same for Nifty. After this downside where a complete red candle has happened and a good base formation around 10,000 has happened. Now let's see the other months how it pans up. If this gets defended around 10,000, 120 or 10,000 range, and even if on the downside it touches 9,500, it tries to keep about 10,000, then we are setting in for an upside. Now upside will be capped once towards 9,800 to 900 zone. So this was the last downside which came through. So even if market tries to go on the higher side, please understand it will basically be stopped around 9,000, 10,900, 800 zone. So that is number one, 700 to 900 zone. It will be first, it will be crossed. So if people want to be bullish, right? So let's say I want to be bullish, but try to understand if you want to be bullish, you need to understand when you can be bullish. So just don't go and try to be bullish because results are going to be out. Try to now understand the bigger frame. The bigger frame says it has to bounce back. Once it bounces back, even from these levels or even from these levels, it will head towards 10,600, 700 kind of zone. After the bounce which will happen, it will be very sure it will come back. So don't get into this first bounce. Please understand. Even if it comes here, there will be a downside. Even if it comes here, there will be a downside. So let's say everything BJP wins. There will be a good euphoria, but there will be a sell-off. Okay, so that will happen. And then if it sustains and goes up, this is where you can see a bigger upside taking place. So I would be basically taking rest, okay, looking the markets from sideways, trying to see or make sense whether these sentimental base effects will pan out or not, right? Because these are the points of extremities where people tend to be irrational, and these are the great opportunities to go in. But this is the first bounce, and I'm never interested in first bounce. I will not get caught in that euphoria. If it goes up and it comes back, tries to test, and then it goes up, I'm way more interested, because it goes up, it basically brings more retailers on the buy side, and then it goes further on the downside. Other way of analogy that one can understand, if I want to put a bear case into mind, okay, how a bear case can come into existence, I'll show you. If it goes up, comes down, or goes up, comes down, don't you think it will form a head and shoulder pattern? This was the first shoulder, head, and this is the shoulder. The case is completely set for the downside, right? So this is like ending towards your May election, and things do not going right, and all of a sudden we can have markets ranging down almost towards 8,000 or so. Correct? So this is where one has to understand that on the broader side, he is making a head and shoulder pattern, and normally big falls do not come with head and shoulder. Why? Because there has to be a blooming upside which has to take place, 90-degree kind of fashion, or bubble should happen. This is not a bubble. The second bounce which will happen over here, the first bounce which will happen, will not act like a bubble. So downside won't bring him down towards 6,000 or 7,000 kind of zone. It will get clocked towards 9,000 or 8,500, right? So this is where one has to understand there are two big cases in mind. Obviously, you cannot be very sure what will happen, but I am very sure when will I take my trades. One is the first bounce, I'm not interested. I know around 10,700, 800 or selling will come by, right? So I'll wait for the second bounce to come in, and then we will focus for the upside target towards 11,700, or maybe coming down towards this, and then it may zoom up. Now this zoom, which will only happen, and I'm interested, but that will only happen if S&P 500 also works out to be the same. Otherwise, upside might be capped. On the second agenda till May 2019, you might face a downside and sideways congestion happening, and then if Modi ji does not win, you have one more downside on the markets. And if Modi ji wins, then the upside will come and it will get capped once again to the top, right? It will not just pass 12,000 and will zoom. So it will give you ample opportunities to enter at the higher levels, because this is the first time it will test, right? And the second time the zoom will take place. So this is the normal stance of the market. This is how they react. And these last 2 months were way tough for traders or to basically make money. Even the investors got caught in this up rally, because many people, when things make new high, they want to enter. They do not want to wait. Everyday prices go up and they want to enter fast and make quick money. And that's where the patience are very important. And that's where the Warren Buffett says, for investor, you need to be greedy when others are fearful. And today when you see all the good stocks, even like DMart from 1,600 is available less than 1,200. Bajaj Finance 3,000 is available, was available around 1,900, 2,000. So the point comes, okay, and those points are the points where you should go in and invest your money for a bigger upside, right? So I hope this structure basically helps you to basically monitor the markets for next month or so. Try to be on the lighter side. Don't try to get into the trade. Even playing options will not help you. Reason, because the volatilities are very high, and because of that, even if you buy puts, they are way expensive compared to even buying calls. They are expensive. So it's better we remain sidelined. As I said, let us see what is happening around 10,100 mark. What's happening? Is it upside is taking place, or maybe 9,700 is being provided support or not? Once that happens, then we are looking for an upside and we are not targeting the first bounce. Please be very, very clear, right? So do not get into it once. Today also morning when it opened gap up, now everything has changed. Market will start going higher from today. Now this is Thursday, this is Wednesday, everything will happen. Don't get into or don't get sucked into the first bounce, right? So let the structure get played out and then you can enter your trades quite safely, right? So that's where the two base cases are there. On the upside, things are limited, please understand. Okay, and on the downside again things are limited. So if you see from these levels of 10,000, upper side is towards 11,600, 700. On the downside also it is limited towards 9,000 or so, right? So that is the good part of it, where because the markets are not in that bubble phase where you can see a huge crash coming through. So try to understand it's not yet in that bubble phase, and if you want to be in that bubble phase, then only you can see a bigger crash coming through. So that's where you need to understand, even if Modi ji does not win or political agendas are not in place, but if earnings catch up and S&P 500 takes a U-turn from here, we are set for 2 years of bull market. So if Modi ji comes and does not come, everything rely on two things. Number one, if S&P 500 clings higher, and second, if oil, we have already discussed oil and dollar, but if S&P makes new highs and earnings catch up, then you are seeing a bigger slide on the upside rather than on the downside, right? And that is where people will not agree, because they would be like, no, if Modi ji is not coming, then markets will crash. Yes, for a month or two it may go down, but after that a complete recovery will take place. So keep your mind focused towards these level, 9,700, 500 zone, and straight towards 9,000. And the upside, it has to sustain now above these 10,000 mark, right? So it should go sideways and sustain above these levels, right? So that's it from my side. We will try to make monthly revision on these structures and try to see whether things are aligned or no. Thank you for joining in.